Jonathan Cheng, what went overnight? What went down overnight in China?
Initial reading on manufacturing for the latest month, we're down again, below expectations and below 50, which means it's contracting.
Right, and it was below 50. It was like 49.6. Now it's at 48.1. Right. So again, you see trouble in China. Last week we had the J.P. Morgan strategy, the analyst, who said, forget hard or soft landing. A hard landing's here. The rest of the market will argue that point. But whether it's hard or soft, I think you're seeing a landing.
Absolutely. I mean, this is the 5th straight month of contraction, or that the index contracted. So, you know, it seems like, especially this week, China has entered the spotlight now. Exactly. You know, we've had this huge run up here in the U.S. and you know, across the globe in stocks, and now we've had a bit of a pullback. A lot of people were expecting a pullback to happen sooner than later, but now it seems like the reason why, or the catalyst, has been China. So the big question is, will this continue? Is China going to be the real story going forward?
Right. Well, keep in mind for the markets, Shanghai was actually down just 0.1% overnight. Hong Kong was actually up a little bit. Now Shanghai pulled back earlier this week, or was it last week? I can't remember, but they had a pretty big pullback recently, so you could argue some of this may have been priced in. Keep in mind, of course, Beijing has a lot more policy flexibility than we do here in the U.S. because they don't have to worry about Congress getting in their way or anything like that.
The people?
Yeah.
Yeah, they don't have to worry. Look, and there are two things that you really need to keep in mind with this story, right? One is that China's economy slowing down means that there is less export demand. There's less demand for the things they're making and exporting. That is a reflection on the global economy. Right. The other thing is China is a huge importer of commodities. If that economy is slowing down, that is going to have a big impact on the commodity market. And you can see that today. I mean, gold, silver, oil, copper, almost across the board, hard and soft commodities, everything is falling down because China is that important to what goes on in Asia, and certainly countries like Australia.
And keep in mind, too, that France, Germany, Eurozone, they also showed PMI weakness as well. So the manufacturing...
I mentioned that at the top of the... Were you listening to this?
But, you know, just making sure that we, you know, loop this all into the big global discussion here. It's China, of course, is really important. But the surprising thing, of course, is that in this global recovery, still pretty tepid so far. It's really the U.S. that's been leading, and that's, you know, an inverse of what we saw.
We saw it again this morning too with the jobless claims report. You know, claims where they were down a little bit. You know, economists were expecting up a little. So, you know, another better than expected reading. And while the rest of the world is struggling a little bit, the U.S. again continues
and again, it gets down to this question of, can the United States stand on its own if the rest of the world is slowing down, is falling? That's going to be the big debate. This morning, the market is saying no.